Committee on Audit to order.
Yeah, okay.
Madam Clerk, please call the roll.
The tablets are open for a roll call.
Okay. Vote are on. Okay.
We have a quorum present.
Okay, and Commissioner Wilson is walking in.
Thanks. See what I
We'll give him a minute to join.
Hey, baby.
Commissioner Wilson, we're doing roll call. Can you tap on your tablet? Thank you. Okay, next item, please.
Item B, Chairwoman's remarks.
I have none. Next item.
Item C, approval of the May 13, 2026 meeting minutes.
Is there a motion? Oh, on your tablet. I know we don't always use these. It's been moved by Commissioner Garza, supported by Commissioner Peterson Mayberry. Any discussion on the meeting minutes? Hearing none. Oh,
Hold on.
what's happening?
What's happening? 1 second. That was Garza. Keep. The board is open.
Okay. Please vote.
Motion
Yeah.
carries.
Okay, could we take item one under new business?
We'll go to item E, new business number 1. Requesting commission approval of amendment number 2 to a 3-year contract with 1 2-year option to renew with Plant Moran PLFC.
Okay, Marcy, do you wanna speak?
Marcy Carr, Auditor General.
Vandy, OT's Deputy Auditor General.
And we also have the Deputy CFO, Betsy Laughlin, if she could join us at the table too. What you have before you today, this was a discussion between M&B and Plant Moran along with our office. This is contract amendment 2 to the 3-year contract with the 1 2-year option for renewal. This contract amendment is for $200,000. $150,000 is for the fiscal year 2026 audit, and $50,000 is going to be for the fiscal year 27 audit. Part of the contract amendment is to use Caseware software. This is Plant Moran software that they use for preparing the governmental financial statements. In the past, the counties used Excel, which it doesn't have efficiencies in it. So by moving to the Caseware software will help with standard disclosures and efficiency. And the second part of the contract amendment is for $75,000 for this year. This is so that the county can go in and get some testing of the beginning balances, because this is the first year that the financial information is within Oracle. So we want to make sure our beginning balances are correct. And also they'll be doing some preliminary work on some of the issues with some of the funds that had difficulty last year. Okay. I don't know if Ms. Laughlin has anything to add to it. And we also have Bill Brickey from Plant Moran online if needed.
Okay. Ms. Laughlin?
Thank you, Marcy. You summarized it beautifully, but the tool in particular, I think, will really help us. As Marcy mentioned, we're currently using Excel. So this will not only streamline, but reduce potential inaccuracies, especially since the statements all oftentimes align. So cross-checking and ticking and tying. And then also just timeliness and integration with our external auditors. So as we're compiling our ACFR, the timeliness and collaboration with them, and particularly this year as we're in Oracle, this tool will require us to upload our chart of accounts. And so now that we're in Oracle, it's a wonderful time to do it so that we wouldn't have to change it and then change it again. So as we have a new chart of accounts, to specifically do it now will be a great use of our time and efficiency, because they're going to have to develop a crosswalk anyways. So I think that will be really helpful, as well as the additional support for our beginning balance testing as we do conversions between our two systems. Making sure that our beginning balances are accurate is going to be critical for especially from our balance sheet perspective for years to come. So having their additional early reviews as well, so we can identify things and have time to remediate them before year end will be critical and helpful, particularly with our findings. Having later adjustments, we're trying to do testing earlier so that those later adjustments will be addressed sooner instead of at the end of the year.
Right. Any commissioner questions? Discussion, Commissioner Colleen?
Thank you, Madam Chair. Is this purchase that Plant Miranda did specific to Wayne County?
No, they use their caseware software with other clients.
Say what?
They use the caseware software. That is the tool with other clients.
So if it's something they're going to use with other clients too, why are we paying for it?
We're paying for the use of it with the Plant Moran, and then the first 25,000 is to develop the template for the Wayne County client.
The template, okay. And then this is going to be used year over year?
Correct.
Okay, thanks. Thanks, Madam Chair.
Anyone else? Can I get a motion to approve? Support. It's been moved by Commissioner Garza, supported by Commissioner Peterson Mayberry. There's no other questions. Please vote on your tablets.
Motion carries.
All right, great. Thank you. Let's go back to unfinished business.
We're returning to new business, item D, unfinished business number 1, communication from John Wallace, Chief Financial Officer, reporting the Department of Management and Budgets fiscal year 2024-2025 annual comprehensive financial report.
Okay, Marcy.
We also have other representatives from the audit findings in the audience if they could join us. Amar, Shantika, representatives from the Treasurer's Office, Sheriff's Office. I'm not sure how many can fit. And Dr. Jackson from the Senior Services. Do we have enough seats? I may have to pull up one more chair.
Here, but do you want to sit here? So then it might be easier with.
Yeah. Down, okay. We'll move down. Thank you, commissioners.
Jackie? And I'll have the guests go around and introduce themselves to get started.
Benita Terry, the Chief of Administration for the Sheriff's Office.
Betsy Laughlin, Deputy Chief Financial Officer, M&B.
Amar Rushing, I'm the interim director of financial reporting, management and budget.
Shantika Bullard, Grants Director, Management and Budget.
William Chuck Jackson, Director, Senior Services.
Melissa Evans, Tax Accounting Administrator, Treasurer's Office.
Javier Adams, Chief Deputy Treasurer.
Jackie Safransky from the Sheriff's Office, Finance Unit Manager.
And I have extra copies of the summary of the audit findings if anyone needs them at the table. We're very good.
Well, sure. Thank you.
Anybody else? Okay, we'll get started. This is our continuation of discussion. At the last meeting, we had Plant Moran who presented the results of the financial statement audit and single audit. So now what we always do is we have the next meeting where we have the auditees come, we go through the conditions and recommendations of each of the findings, and then they explain the corrective action that they plan to implement. Okay. Our first finding is 2025-01. This is with measurement and budget. The condition is that the county's general ledger and underlying financial records were not reconciled and closed in a timely manner. There were numerous adjustments that should have been identified by management, which were instead identified during the audit of the county and component units. The recommendation is the county should work with all departments to ensure that each has adequate resources to fully and accurately reconcile and record activity throughout the year and identify and record year-end entries prior to the start of the audit. An independent review of reconciliation and trial balances prior to the start of the audit would assist in identifying and correcting potential errors. As I indicate, this one responsibility is Department of Management and Budget.
And this has been a repeat finding
Repeat.
since 2024, or no, I'm sorry, since 2017.
Mhm.
All right, okay.
Hello, everyone. Mara Rushing again. I'm the interim financial director of financial reporting. So this first finding, we've had continuously year after year. What we're hoping with the implementation of Oracle and also with our stabilization efforts to make sure that we're closing months timely and that we're prepping for year end timely. There's several things that we have kind of in the hopper to help us alleviate this finding in the future. I think once that we're stabilized within the Oracle system, we'll be able to kind of chip away at this and really bring it down to eliminate it. That thing is probably a couple fiscal years out just with the stabilization efforts and then the tie out from the conversion to JD Edwards from JD Edwards. So we think that those will be resolved in the future.
So you don't expect this one to be resolved next fiscal year, but
Yep.
maybe.
So we don't expect it to be resolved next fiscal year just because we're in the stabilization period. So there's our for some of the months during the year, we haven't followed our policy in closing timely, and it's due to some of the limitations and some of the issues that have come up during the implementation of the new system. And so we're thinking once we stabilize, probably in fiscal year 27, that will be in a good spot to alleviate this finding and eliminate it.
Okay. Any questions? Commissioner Peterson, Mayberry?
Thank you, Madam Chair. So I understand, Mr. Rushing, about the timeline that looks, that's ahead of us. Is there a midway point that we would know that, yes, we're on the right track, or we're still seeing this? Because I'm assuming we're saying Oracle is going to fix all of this. Because we have Oracle now that will fix all of this, and we haven't had it in these previous years, I'm assuming, as to why this was a repeat finding. But I know you're saying you kind of need some time to implement it into the new system. But is there a midway point that you could at least say, we're on the right track versus, or not? Because then afterwards, then if you come back to the table, it's like, well, we had Oracle, we thought it was going to fix it, but we ran into some hiccups, but then we don't find out until the very end.
Yep. So there is kind of a midway point. I would say that it's captured through our KPIs in our department. So we have a specific KPI related to month-end close and year-end close that we report out monthly and annually. So we'll know within the first 6 months of the fiscal year if we're on track to eliminate this finding, based on the additional things with Oracle that we've implemented and some of the additional reconciliations and reviews that are going to come with that process.
Okay, thank you. Thank you, Madam Chair.
Marcy?
I just wanted to add to it, while this finding the responsibility as a Department of Management and Budget, in order for Department of Management and Budget, they have to rely upon all the other elected officials and departments to make sure their reconciliations, everything, their processes are complete. So it is their responsibility, but everybody else has to contribute to it too.
Madam Chair, just to that point, so even in the midway point, then identifying people who aren't adhering, I think that's important so that all the responsibility doesn't lie just with M&B. There's accountability with other departments in this process as well. Thank you, Marcy, for bringing that up.
Okay. Oh, Commissioner Clean.
Thank you, Madam Chair. I'd like to ask the Auditor General, in your recommendation here, you discuss an independent review of reconciliations. What does that mean? Independent? Who?
That would be like a department's doing the reconciliations and it needs somebody that wasn't involved in the processing of the transaction to do the independent review to make sure transactions were and reconciliations were complete.
So that
It's
means
not an outside person, it's somebody that's just maybe a step above.
okay. And have we identified who those are in the various?
It would be each department and elected officials' responsibility to
Yeah.
have their oversight.
And in the course of this, have we discussed whether they have that in their structure or not? I mean, how do we make sure that happens?
That would be something I think management and budget would be responsible for, looking at the oversight, and who's going to do the reviews of reconciliations, and also within the department. It wouldn't be our office or the external
Yeah.
auditors.
So how will we know going into next year audit that this has been accomplished across the county?
If you see the reconciliations being completed and you also don't find the errors where you have to make adjusting entries.
I will also note that we, NMR has actually implemented a weekly month-end close meeting with electeds and departments inclusive. And then for month-end close, there's a detailed timeline with reconciliations and responsible parties with the timeliness of it. So as part of the close, we have the schedule, which will identify. And to Marcy's point, reconciliations would be just a segregation of duties. So the person actually performing the functions and processing it shouldn't be the one actually reconciling it. So we've implemented, differences from the actual identified practitioner who will be supporting those in the month-end close timeline.
So is it going to be up to MMB then to ride herd on this when departments and other elected officials do their reporting? Is it going to be MMB that says, have you had a independent, who's going to look at this and say, okay, these numbers we're good with because of the process?
Yeah, so as part of our discussions and our weekly connects, we're collaborating in terms of making sure that each of the departments have folks identified and they're comfortable as well with who they've identified. I know Vanita, for example, is doing reconciliations for her group for specific activities. So we're collaborating to identify and make sure that obviously MNB is dependent on them. As their own electeds, they can make those decisions, but we're also collaborating to make sure that those folks are identified and that we're tracking them.
Okay. The concern is this is 7 years. And we receive assurances every year for 7 years. So this is a personnel problem, not a software problem, or?
So there are aspects, I will say, that, for example, we have recognition for our property tax is actually 60 days and grants is 90 days. So there are inherent aspects specific at year end where we have to keep the books open to ensure that we're recognizing after the fact. In FY25, we did close, I believe it was 10 business days, though there were some adjustments that we had to make after the fact and open some of those periods. So I wouldn't say it's a system situation. However, in Oracle, there is some auto closes that will certainly help us in order to do them more timely, as well as our processes we're putting in place for more recurring and I would say more consistent reviews of any exceptions that will be Oracles and their reporting will help us get to those and identify those exceptions more quickly and hopefully rectify those during the timeliness within that month-end close period, I would say. So I think it's both processing system. So we're working on both aspects to remediate the issue.
Thank you. Thank you. Thank you for causing me to cough.
All right, Vandy's going to go through the conditions. I'm going to turn over to Vandy OTC. He's going to go through the conditions recommendations. I could just add.
Next, we have finding 2025.002, which falls under management and budget. The condition is the county lacked appropriate overall monitoring of account balances during the year in order to compile complete and accurate financial reports that result in many auditor proposed journal entries. The recommendation was the county should develop overall monitoring procedures to aid in ensuring that all activity in the fund is complete, accurate, and logical. This includes assigning an appropriate individual to each general ledger account, as well as several individuals who would be responsible for the entire general ledger and financial statements to perform monitoring analytical analysis, and adjustment as needed.
Okay,
Just
Commissioner-
to add, this one is similar to the prior one where it's responsibility of management and budget to make sure it's taken care of, but also the other departments, elected officials play a role.
Okay,
And I would say to piggybacking off of the stabilization meetings that we've set up on a monthly basis with departments and elected officials. The process there is going to be to make sure that we're prepping them to be able to monitor and get those audit adjustments in prior to the auditors showing up. So that's all inclusive in that meeting with those departments. I would say additionally to that, some of the areas mainly related to GASB 84 and some of our fiduciary reporting. Oracle will allow us to kind of shift that over to the general ledger where we won't have to do the year-end roll-up to get the amounts. We'll be able to do it throughout the year as transactions and things are happening. So I think we have those that infrastructure set up to alleviate this finding.
okay. Is your goal about the same as the first one? Are you looking at fiscal year 27?
Yeah, I would say that it would be similar to that. And then mainly we'll know in that first 6 months if we're going to alleviate the findings. And we can.
Okay, let's move on to the next one.
We have finding 2025-003, which is also under management and budget. The condition, there were numerous instances identified where the county was not in compliance with laws and regulations. The county has not quantified the amount to be escheated to the state of Michigan and therefore has not escheated required items by September 30th, 2025. For the general fund, roads funds, special projects funds, and multiple non-major governmental funds, actual expenditures exceeded the approved budget. The county's original budget and amended budgets for Victim Witness Fund and Raise the Age Fund, the original budget for the Law Enforcement Fund, and the amended budget for the Law Enforcement Fund would have resulted in a projected fund deficit as presented in other supplemental information. The county did not approve and adopt a budget for the Wayne County Building Authority Special Revenue Fund. The county incurred costs before the end of the year, but did not amend the budget until after year end, which resulted in expenditure of funds that were not budgeted for. The recommendation, the county implement a process that identifies specific individuals for identifying and monitoring applicable compliance requirements throughout the year. In addition, the county should file a voluntary disclosure agreement form 4869 when submitting a statement to the state.
Okay, Marcy.
I think what's key here too is part of the escheatment process, the county adopting an escheatment policy and making sure the various entities within the county that must escheat funds to the state that is taking place.
Okay.
So I can speak to each of these kind of bullet by bullet. So for the escheatment, we have a project plan in place to one, obviously first to finalize our policy, as well as the steps and identifying the resources to alleviate the escheatment issue. And then I guess I'll jump down to the building authority. Great news. I confirmed with our director of budget that it was included in our FY27 budget submission, which was submitted timely. I'll have to add. As for the other remaining ones, what we have done is our big focus is budget to actual reviews. So we have been working now that we have the new system. It has taken some time to pull that report and to validate it. But both budget as well as myself and my staff for DMBS are reviewing those budget to actuals on a monthly basis, as well as submitting it from a quarterly perspective. And truly our monitoring procedures that we're putting into place should really help identify these before they become issues, as well as help to alleviate the year-end submissions and push for those budget adjustments. So really those increased controls around monitoring our budget to actuals will hopefully address the majority, the rest of the remaining findings that were here listed.
Okay. When that escheatment policy is finalized. Will the commission get a copy of it?
Yes, we can submit to the commission.
Okay.
Yes, ma'am.
Any questions, Commissioner Coyle?
Thank you, Madam Chair. And I'm just going to repeat, this is 7 years of a repeat finding. One of the recommendation is to identify individuals for monitoring all these various funds. Is that what management is going to do? How are you going to?
Yeah, so we have multiple levels. So both our budget and their budget analysts, as confirmed with our budget director, as well as myself and my DMBS staff, are reviewing budget to actuals monthly.
Monthly?
Yes, correct.
All right, look forward to seeing this disappear next year. Thank you, Madam Chair.
If I could just add to the achievement policy, I think the achievement process, this is going to be an enormous task because I think in part is like the permits in engineering, you want to make sure that we're not escheating funds to the state that actually should come back to the county. So we have to make sure what we're escheating is actually those funds that should be escheated and not county funds. So it will take some time.
Yeah. And we will need data specifically from the treasurer's office to confirm. So we'll be collaborating with them.
Let's move on to number 4.
All right, so for finding 2025-04, it falls under the sheriff's office. The condition is the county did not have procedures in place to ensure that the inmate property bank accounts were reconciled to the inmate cash balances per the jail management system and general ledger on a timely basis. The recommendation, the county should develop a process to ensure that the inmate property bank account is reconciled to the jail management system and the cash reconciling items be reviewed for proper escheating to the state.
Benita Terry again, Sheriff's Office. So I can't speak on prior to 2023, but since I've joined the Sheriff's Office, I know that we have a dedicated individual to do these bank reconciliations timely. However, we continue to run into a roadblock where the system that we're using, the jail management system, isn't a financial system. So we're trying to basically create a book balance that reconciles to the bank. Every month, each transaction in that bank account is identified and reviewed. We have not submitted any of the reconciliations this year to the treasurer's office or M&B because we've just found some additional reports that may be needed in order to complete the reconciliation. But I can assure that every month we have an individual that's dedicated to reviewing these bank statements every single month. So that's being done timely.
Okay. Marcy, do you have any?
Want to add to what's
input on-
important, the reconciliation, because these are the fiduciary funds that actually belong to the inmates.
Yes.
So we want to make sure what's in there. If an inmate would leave, their funds are there to take with them. That we don't want to make sure we have too much in the inmate account and not enough cash actually in the bank account. That's why it's important to do the reconciliation.
So because there's no financial system in place in the, I'm sorry, what did you say it was called?
So jail management system is
Jail
basically
management
for to track all the activity with our inmates, how we classify them, their commissary funds, but it's not an actual financial system.
Right.
Trying to create a book balance is what's created a problem. We do have a funds that we are showing that needs to be escheated to the state, but we can't do that until the escheatment policy has been solidified. And that's it. We really have, it's a huge account and we have to identify those transactions monthly.
Is that something that we can get you, or is
We-
there a system that exists?
We
that-
have contacted DOIT, was that last year, Jackie? And asked just if we could go with QuickBooks at this time. Maybe that could help us provide the information that we need. Since this is an off ledger account, but that has not happened.
IT looked at JMS and determined that QuickBooks was not going to be appropriate. We have asked for their input on what could they find for us, and we have yet to hear back from them.
Commissioner Peterson, maybe.
Thank you, Madam Chair, and that was my question as well. And if not QuickBooks, then what? I mean, we're in 2026. we should not be relying on manual. I don't know if this is something Oracle could do. I don't know if there's a carve out for Oracle. We pay as for what we're paying. It seems like it could do everything. I don't know if there's a area of Oracle that could address this, but if not, then what is a system? If not QuickBooks, then what? Because I think relying on manual input of this to create this book balance is probably archaic with everything else that we're doing in terms of innovation.
Most definitely it is. We're going to request a meeting with Tyler Technologies
Okay.
again because we pay them a large amount.
Okay.
And I don't want to pay additional to get support for our financial piece, but they did communicate to us that the financial portion that we're using in JMS is basically a CAN system. It's really not for financial reporting. So we're going to meet with them again and see what can we come up with so we can, I can, and all of us can feel more comfortable with the numbers that we're producing.
And can you just let the commissioners know too, because if there is something that you need that you don't have, so that we don't keep having a repeat offense of this, because this kind of seems like something that we should be able to fix pretty quickly if we just have the right resources.
Exactly.
Thank you.
The commission will know because I'm sure there's going to be an additional cost
Yes.
that we will have to bring to
Thank
the
you,
commission
Jackie.
for approval.
Yes, Jackie's
So-
putting the plug in. Okay, thank you.
Okay. Let's move on to, number 5. Right?
Finding 2025-005. And this finding falls under the treasurer's office. The condition is the county did not have procedures in place to ensure that the balances within the fiduciary funds were properly reconciled at year end and the necessary activities were appropriately moved to the general fund. The recommendation is the county should develop a process to ensure that the balances within the fiduciary funds are reconciled timely and accurately.
Okay.
Good morning. Jean-Pierre Adams, Chief Deputy Treasurer. Let me first say that when the findings were presented to us, number 5 was not a finding for the Treasurer's office. It was under M&B, and the responsible person was Amar. So it's a bit of a surprise to see it today as being under the Treasurer's office. So with respect to the fiduciary funds, I'm assuming that this is also related to finding number 6.
Right, the 703 fund.
Yes.
Yes.
Okay. So can we address 5 and 6 together then? Okay.
Okay. For finding 2025-006, the condition is the county did not have procedures in place to ensure that the balances in the undistributed property tax fund were properly reconciled at year end. The recommendation, the county should develop a process to ensure that the undistributed property taxes are properly stated in the general ledger.
Melissa, you want to address, please?
Yes, so, as you all can see, this is a repeat finding. I'm referencing, number 6. So what we have done so far, we've moved, the big piece of mapping over to, someone else that can help us out, that is a little more well-versed in that area. In addition to that, I am meeting with Plant Bill, I want to say in about 6 weeks or so, to do a check-in. In regards to our reconciliations, we did have some challenges, mainly related to mapping. And we just had a lot going on with our meetings, Oracle. But we expect this finding to be rectified this year.
So
26.
let me just add, because this has come up repeatedly, and what we had identified in the past as historical imbalances and problems with reconciling these accounts, we changed our method this year, and we started afresh with 2025, and we were able to then see systematically what the problems were this year with our mapping and with the conversion to Oracle at the year end. We had a a huge gap in being able to reconcile and distribute those funds at year end. And that was very unusual this year. So we think going forward, because we've moved that balance from prior to 2025 into a separate account, where we will work on that separately, then going forward on the annual audits, we should not see the same issues once we rectify the mapping.
Okay,
I
Marcy.
can just add, I think, like Melissa said, working with Plant Moran early on, I think that will help too. So we're not waiting till the end when the audit time comes in. Step. Amar, did you want to talk about the number 5?
Yeah, and I had mentioned a little bit earlier when we were talking about the fiduciary funds that our team is also working with Plant Moran to identify areas that we can move the activity and have it reflected properly in the GL, so that we're not doing all of these year-end adjustments that impact the audit timeliness. So that kind of process is in place that we'll work with Plant on that.
And I'll update the schedule so it reflects the management budget for 05.
Thank you.
Okay, let's move on to 7.
Finding 2025-07, and this falls under the treasurer's office. The condition for one bank utilized by the county, certain individuals are able to initiate wires without the need for secondary approval. The recommendation, the county should implement stronger controls in place over wires to ensure that secondary approval is needed for all wires out of the county bank accounts.
So this year, we finally got the auditors to identify the bank instead of just one bank. Last year's finding we thought was related to our Michigan class account that did not require, did not allow for 2 signatories on that account. And then that was changed. And we disagreed with the finding last year on the basis that it was Michigan class. When it came back this year, we insisted that we get an identification from the auditors, and it was the retirement account. So what we found is that they changed the account procedures on that account, but we are not the primary users. And so with this function, with our 2 people identified, it's a function that we don't use. And we have rectified it. It has been corrected. It now requires the 2 signers, but it is a function that our office has not used historically.
Okay. All right, so this one's been corrected.
It has been
Good.
corrected.
Okay.
Mhm.
All right, number 8.
All right, finding 2025-08 under management and budget. The condition, while significant improvements have been made over the past several years, and the county does have adequate procedures in place, the county lacked the operational effectiveness to ensure that all bank accounts were fully reconciled to the general ledger on a timely basis. The recommendation, the county should develop a bank reconciliation process that ensures the reconciliation is complete with only the appropriate reconciling items on a timely basis.
I'll take that one. So
Sorry. I'm just going to add, for the reconciliation process, it's a 2-part, parts M&B and parts the treasurer's office.
Okay.
and so as it relates to the M&B process, so we're pretty much overhauling our bank reconciliation process. And then that kind of ties into that stabilization meeting where we're going to be looking at all reconciliations across the board, but specifically to cash, we've also kind of set up a weekly meeting with Treasury so that we can kind of hash out the process and really make sure that both teams are on the same page and that we can eliminate this finding in the future.
Okay, great. Commissioner Clean.
Thank you, Madam Chair. And I'd like to ask the Auditor General, under condition on this finding, you use the phrase operational effectiveness. The county lacked the operational effectiveness. What do you mean by that phrase?
First of all, these recommendations are Plant Moran's recommendations. So the operational effectiveness,
That's Plant Moran's,
yes, these are Plant Moran's recommendations,
So-
not our office.
not the recommendation, but also the condition.
everything in from the financial statement audit and the single audit
okay.
plan.
Because I don't know. Do you know what they mean by operational effectiveness? It
Probably
sounds like it's kind of a standard.
maybe tied to the
auditor.
two-part reconciliation. So to be effective, both parts have to work together. I could only, not really sure what they mean.
Yeah, that phrase stood out to me. All right. We'll catch. Thank you, ma'am.
Okay, let's move on.
All right, we're finding 2025-09, which falls under management and budget. The condition, during the year under audit, the county made a payroll disbursement to an employee that was significantly greater than what it should have been. The recommendation, the county should ensure that sufficient reviews of biweekly payroll include pay rate changes are occurring prior to the process of payments.
So we have actually addressed this finding. We have implemented both preventative and detective controls around our payroll processing, both pre-payment and post-payment reviews. Multiple reviews are in place, as well as John and myself review dashboards of metrics after each biweekly payroll to identify trends and track any changes. So this one has been addressed and rectified.
Great. Number 10.
Now then, before Vandy gets to the next two findings, these are related to the single audit. I just want to commend the single audit team, just having the two findings this year. I think this is remarkable.
The next finding, 2025-010, and this falls under the Area Agency on Aging. The condition, the county engaged a third-party contractor to perform certain eligibility reassessments, including obtaining verification of medical necessity when required. While the county had a process in place to properly identify when reassessments was required and to follow up with the contractor about the status of reassessments, controls did not ensure the third-party contractor followed through on reassessments on a timely basis. The recommendation, the county updated its policy on the reassessment process, including actions to be taken when participants refuse to complete the reassessments or cannot be contacted. This plan should also include a schedule for actions to be taken when participants do not complete reassessment submissions timely. The county should also implement the appropriate controls to monitor the third-party contractor and ensure reassessments are performed timely.
Okay, Marcy.
If I could just add too that this is a single audit finding, but there was no question cost here.
Commissioners, I'd start with a couple of corrections. It would be the Department of Senior Services and not the Area Agency on Aging as the area that this falls under. And then secondly, under conditions, it says the county engaged a third-party contractor. That is incorrect. The contractor is actually engaged by the area agency and not by us. We do not pay them. They are not a vendor of our department. They are hired by the Senior Alliance to conduct the assessment. So as it indicates, we put processes in place to monitor and make recommendations for reassessments or to follow up on reassessments. However, we do not have any control over that company. And we've had multiple meetings with both the contractor and the Senior Alliance regarding their performance. And the corrective action at this point is that they will not be continued as a contractor with the Senior Alliance. They will take that responsibility on themselves because they just simply, I think, lack the capacity to follow up accordingly. So the corrective action is this vendor will be replaced by the contractor that hired them.
Okay.
So you're indicating we're a subcontractor of the
They are not a subcontractor of us, of our department.
But of whom you had implementing the program.
Yes, they are a subcontractor for the Senior Alliance.
Yes, okay.
Commissioner Clayton.
Yeah, thank you, Madam Chair. So, Mr. Jackson, since this, this third party arrangement, they hired them. And now the Senior Alliance is going to take this in-house?
Yes, they are.
Do we have the proper contract with the Senior Alliance that allows us to have our nose under this tent?
Currently, no, because contract is currently in existence. We've just bid on a new contract. So this could be something that could be addressed in the upcoming hopeful contract.
Yeah, that's what pops out to me, is that we have to have something in the contract that says there's a flow of information back and forth, and the county can say, we'd like to see this, we'd like to see that.
Well, as I said, the contract, if awarded, will be negotiated coming up pretty quickly here. So that could be something we definitely discuss and having included in the contract.
All right. Thank you. Thank you, Madam Chair.
A question from Commissioner Garza.
Thank you, Madam Chair. This is just a question for Marcy. I have a question about the conditions. So as the director just mentioned, the county doesn't engage that. How do we ensure that the facts of the conditions are correct before they're brought to this committee? I'm just concerned that if those facts we're not starting off with facts, how do we find material weaknesses like this? That's a big fact that the county doesn't engage a third party directly, and it's through one of our subcontractors that engages them. So I just wanted to have you speak to that.
I will discuss this with Plant Moran after the meeting to get a better understanding of the third-party relationship. Because the county contracts with the Senior Alliance, correct?
Yes, the county contracts with the Senior Alliance, and the Senior Alliance contracts with the company to provide the assessments. So they're two separate contracts.
Right, but the county is relying upon Senior Alliance to follow all the compliance regulation, and if they pass that on to another party, it's still the one we've contracted with that's responsible. I'm correct. Senior Alliance would still be responsible to make sure all the eligibility requirements are being met, even though they pass that on to somebody else, if I'm understanding the relationship correctly.
Yes, I would think so, yes.
So when the auditor is saying the county engaged a third party, the third party would be Senior Alliance, which is correct.
The contract is actually between the Senior Alliance and the county. The county is the contract. Which one is the one who's being paid to do the work? That's the contract T. Well, we are paid by the Senior Alliance to provide the service. So,
but I think if the Senior Alliance's subcontractor is not delivering correctly, that's the issue.
Right.
So that's what's part of the audit.
Right.
Right.
Correct. That's the way I'm looking at it.
right. And so, and our response and corrective actions has been to repeatedly discuss that in those issues, and I think that may have contributed to why the Senior Alliance will no longer be retaining them.
Right. Because ultimately, the county is responsible in the long run.
Yeah.
That's fine. It does partly. I just wanted to make sure that we're looking at the facts of what's being printed in the condition section of these in order for us to get that right, because we have to start off with the facts in order to look at material weaknesses. So I just wanted to make that point. Thank you.
And I can get back to you once I talk to Plan more on it.
Thank you. I appreciate it.
Commissioner Kleen.
Thank you, Madam Chair, for recognizing me again. I just want to emphasize the point. It's the county has a legal responsibility for knowing eligibility.
Yes. And
so this third party or the contractor that Senior Alliance had threw a monkey wrench into that.
Right. For us, the issue for us, we have one corrective action when a reassessment isn't done. If it's not done within 90 days, then our only recourse at that point is to terminate that senior's service, which of course is onerous.
Yeah, we can't do that.
But,
yeah, I mean, we will, but
But that's our corrective action, or that's our action when the reassessments aren't done. So it is certainly, we're not supposed to be providing services to seniors who haven't been reassessed.
Yeah.
So after 90 days, we have to terminate. They can be reinstated, they can reapply for services, but they would be starting all over.
When are we expecting a new contract with Senior Alliance?
October 1 is the start of the new contract year.
So we'll see it in late August, early September.
Hopefully sooner.
Yeah. Hopefully sooner, yeah. But it seems like this would be a topic of conversation now that their vendor is gone, to make sure that the county and the Senior Alliance, through their contract, have this covered.
Yes.
Thank you, Madam Chair.
Okay, let's move on to 11.
All right, finding 2025-011. This is also under the Area Agency on Aging. The condition, the county did not maintain effective internal control over the reconciliation of expenditures reported on the schedule of expenditures of federal awards to amounts billed to the funding agency. The recommendation, the county design and implement effective controls over the preparation of the CFA, including maintaining adequate support for adjustments and reconciling items. Such controls should be performed and reviewed by personnel independent of the CFA preparation process to ensure the completeness and accuracy of federal expenditures reported.
And I could just add a little context from the actual finding itself. It was identified that expenditures related to the aging cluster were understated by approximately $126,000 on a preliminary CFA due to omissions of the expenditures that had been billed to the funding agency but backed out of amounts reported on the CFA. So that's just a little context.
Thank you for that. So this will be addressed within grants. We've adjusted our reconciliation process, and we are requiring review of support prior to inclusion in the CFA. And like many of the conversations here, we work in conjunction with the other departments and offices to ensure that we have the support to review timely. And when it comes to year end, there are adjustments that are made. So the reconciliation, though it happens timely, sometimes has to be repeated multiple times. So as a part of our adjusted process now, there will be an exclusion or a delay in including any of the expenditures that do not have adequate support to be vetted.
Okay. Any questions? Marcy, do you want to
Say
wrap
that
up
completes our presentation. I just want to take this opportunity to thank Plant Moran along with everybody that's sitting at this table and all their departments. I know it was a lot of work to get the audit done on time before the deadline, and just thank you everybody for all the efforts, especially our Deputy CFO Amar, Treasurer's Office, Shantika. They just did an outstanding job, many late night calls, and they got it done. So it's important.
Thank you. Okay, do we need to do anything, receive and file? Okay, what did we do? We need to do item 2? Yeah, item 2. But let's do receive and file both of them together. So we'll take item 2 now.
Item 2. Communication from Marcella Core, Wayne County Legislative Auditor General, forwarding a letter from Plant Moran, PLLC, the county's independent external auditor.
Marcy. Okay. All right, can I get a motion? It's been moved by Commissioner Garza, supported by Commissioner Peterson Mayberry. Are we voting on the tablets? Oh. All right, please vote. Oh, Amy, hold on.
Now we can vote.
Okay, now vote.
Commissioner Colleen.
Commissioner Colleen, can you vote?
Commissioner Colleen. Motion carries.
All right, great. Thank you. Next item.
We're moving to item F, such are the matters as may be properly submitted before the committee.
I have none. Next item.
Item G, public comments.
Is there anyone here who wishes to make a public comment to the Committee on Audit? In person, on the phone, on Zoom? Second call for public comments.
There's no one on Zoom.
On the phone or on Zoom, you can just unmute yourself. Third and final call for public comments. Hearing none, we will move on. Next item.
Item H, adjournment.
Is there a motion to adjourn? There's a motion and